Hey guys, when you're looking to invest in the stock market, you have a couple of different options. You can trade stocks, trade options, or do a combination of the two. In this video, we're going to discuss the pros and cons of trading stock options versus trading stocks. By understanding the key differences between the two, you can make an informed decision about which is right for you. We're going to discuss what stock options are, the pros and cons of trading both stocks and options, and if you should trade both stocks and options. Quick, please hit the like and subscribe buttons below. It helps get these videos out. And also check out the links below to the Tastyworks Options Trading Platform. You'll get $200 in free stock by signing up using the link. And there's also a link to a free options training and guide as well. So what are stock options? Stock options are a derivative product, meaning their value is derived from the underlying stock. Option contracts give the holder the right to buy or sell a certain number of shares of stock at a certain price within a certain time frame. Options can be used to hedge against inflation, generate income, or speculate on the price of a stock. As an example, let's say you're bullish on XYZ stock and believe it will increase in value over the next year. Say you buy 100 shares of the stock for $50 per share, and alternatively, you could buy one XYZ call option and strike price of $50 and an expiration date a year from now. The option would give you the right to buy the 100 shares of stock for $50 anytime within the next year. If XYZ stock is trading at $60 per share, you could exercise your option and buy the stock to close at $50, making a $10 profit, or in other words, $1,000 on the 100 shares. So what are the benefits to trading stock options? Options provide leverage, meaning you can control a large position with a small investment. In other words, you use much less buying power than buying the stock outright. To buy 100 shares of, say, ABC stock at $50 requires 50 times 100 shares, or $5,000. However, to control 100 shares with one option contract, it may cost only $250. The other benefit to the example just covered is that by buying the call option, we're limiting our downside risk to the $250, which is the amount that we paid for the option. If we were to have owned the stock and it tanked to the downside, we would lose much more, the full $5,000. It can also be used as a hedge against risk. For instance, we may have most of the positions in a portfolio betting long, and the stock market will go up. In this case, we want to have some short positions to hedge in case the market does go down. So in other words, we're playing both sides. Options can be used to generate income as well. The way that they generate income is by selling premium. When you sell an option, you collect option premium as income. Options can also be used to speculate on the future price movement of a stock. If we think a stock's going to go up, we can buy a call option or sell a put option. And if we think a stock is going to go down, we can buy a put option or sell a call option. Options provide the ability to tailor a position to your specific risk tolerance and investment goals. You can pick the probability of the stock option remaining out of the money or in the money and expiring worthless. Of course, there's a risk-reward trade-off. So the higher the probability of the option expiring worthless, the lower the option premium received. What are the benefits of trading stocks? Stocks provide ownership in a company. By owning a small portion of a company like Johnson & Johnson, you're entitled to a small portion of the company's earnings and assets. Stocks can also generate capital gains. When a company's stock price increases, shareholders can realize a capital gain, which is the difference between the purchase price and sale price of the stock. Some stocks also pay dividends, like Johnson & Johnson. Dividends are payments made by a company to its shareholders. They're typically paid out quarterly. Companies choose to pay dividends for a variety of reasons, but it's generally a sign that the company is doing really well. Let's talk about the downsides of trading options. Options can be complex and a little confusing for new investors to learn. So there's a little legwork up front to understand how they work and what strategies can be utilized. There's a free options training that I'll link down below, so check that out. Options can be risky if you're learning and want to go too big. Since you're using leverage, you need to stay small, especially while you're learning. You can also utilize stop losses or spreads to limit your risk. Another downside to options is that you may be subject to margin calls if the value of your stock portfolio or options falls below a certain level. A margin call is when your broker asks you to add more money to your account or in turn sell some of your positions. This can be a very stressful situation if you're not prepared for it. Time decay must be taken into account when trading options as well. This can be good or bad, but this is due to the fact that options lose value as they get closer to expiration. This is a downside if you're buying options and a benefit if you're selling option premium. Sides to trading stocks. Stocks can be volatile, meaning their price can rise and fall sharply in a short period of time. Many things affect the value of a stock. For example, news about a company's financials, the overall market in general, or even the weather can affect certain stock prices. Geopolitics as well can affect the price of a stock. When buying stock, you're using much more buying power than you would if you were to use options. So your risk may be higher when buying stocks outright in many cases. At the same time, some stocks require a long-term investment horizon. You may have to wait years for your investment to pay off. So you may ask yourself, should I trade stocks or options, or should I trade both? If you're new to investing, you may want to start with stocks. Once you've built up some experience and knowledge, you can begin to trade stock options. For more experienced investors, trading both stocks and options can help to diversify your portfolio. This can help you manage and potentially generate more income. Both stocks and stock options have their pros and cons. It's really up to the individual investor to decide which one is right for them. There's really no right or wrong answer when it comes to deciding whether to trade stocks or stock options. It ultimately depends on your individual goals and risk tolerance. However, both options can be beneficial in different ways. If you're new to investing, start with stocks. Once you've built up some confidence and learned some of the strategies, start with trading options. For more experienced investors, trading both stocks and options can help to diversify your portfolio and generate more income. Whatever route you decide, make sure to do your research and understand the risk before making trades. Hey guys, thanks for watching. Please make sure you hit the like and subscribe. Use the Tastyworks Options Trading Platform link and you will get $200 in free stock by signing up below. Also, there's a link to a free options training and guide as well. Let me know your thoughts and comments below, and we'll see you in the next one.